So as many of you guys know, conventional financing got a lot more difficult for people who are purchasing their second home. That's because the FHFA, who is in charge of Fannie Mae and Freddie Mac, recently instituted penalties for people who are purchasing second homes, but there's a way around it. So basically, the way that they have it set up is that if you are putting less than 20% down, you face the heaviest penalty. But the more money that you put down, that penalty starts to decrease all the way until you get to 40% down, in which case you face the lowest penalty. Now, a lot of people don't want to put 40% down. There's a way around that too, though. So what you can do is you can still purchase that second home by putting 10% down, but 60% of that mortgage would be a first mortgage, the mortgage that you're used to, the regular Fannie Mae and Freddie Mac mortgages. And you compare that with the second mortgage, which makes it so that that first mortgage meets the requirements of having 40% down, 60% loan to value. Then that second mortgage is filling in the gap. And then the last 10% is going to be the down payment money. What that does is it actually makes their monthly payment lower than it would have been if they had just did a regular loan at 90% of the value, because that second mortgage that they have is an interest-only HELOC. So they end up with the first mortgage, which they pay their principal, interest, taxes, and insurance just like they normally would. Then they have the second mortgage that they pay separately, but it's an interest-only payment. They can pay a little bit more, pay a principal and interest payment based on a 30-year loan, but the rates on the HELOCs are actually lower than they are on that first mortgage right now. So, the first mortgage, you may end up with a rate that's in the 4s or 5%. With a good credit score, you can get the second mortgage, and the rate right now on that is like 3.95% if you go up to 90% loan to value, which is you putting 10% down. So if you have anybody out there right now that's looking to purchase a second home and they have a lender that's giving them pricing or rates that just doesn't seem like it's feasible or usable, which is what a lot of people are facing right now, this is an option where they can still purchase their second home, they still put 10% down, and they end up with a monthly payment that's lower than they would have done if they had done it traditionally before with the 90% loan to value or 10% down purchasing it with just a regular standard mortgage. I know that can be a little bit complicated, so if you have any questions, feel free to call me. I'd be happy to run you through that. But there's still a very good option for people who want to purchase a second home and not have to break the bank. All right, catch you later.